Well, ladies and gentlemen, as expected, the volatility continued. And before we break down the markets, earnings, stocks, all that good stuff, make sure to get your 5 stocks from Moo. Link down below. All you have to do is deposit at least $100, and you could get up to 5 stocks, each of which could be valued up to $3,500. Link down below. Literally free money. And now let's break down what the heck's going on. We have earnings, stocks, the markets. The red is continuing. What else is new? We got to break it down. So today, we had SPY close down over 1%. We had the Russell down 1.4. The NASDAQ went down about 1%, same as SPY. And we had the Dow down also 1.4% like the Russell, as we had the VIX up 3.8%. And we had gold up 0.1% and silver up about 0.7%. So we had a lot of volatility. The metals are up, meaning there's fear, there's uncertainty. And based on this 5-day, 5-minute chart on SPY, the downtrend is clearly continuing. And we had a double bottom at about 425. I guess triple bottom if you count what happened yesterday, right? At about 425. So that shows very strong support at that point. And like I've mentioned, if we go back here to the 4-hour chart, like I've mentioned, 425 is so critical for SPY, guys. That was support back in October, also about a month ago. And now where we're holding it the past day or two. So if we break under 425, I'm going to put my alert right now. Mark is at or below 425. If that point ends up breaking, I'm telling you, we're going to see some negative pressure here, some downside pressure, and this might be going down to 415, as you guys can see based on this chart, maybe down to about 400, 405 on the lower end. And it's clear as day. It's clear as day. We have a head and shoulders here on the yearly chart on SPY. Left shoulder, head, right shoulder. We failed at about 455, which was the neckline. We double topped there, which we've talked about before as well. That was a couple of weeks ago. And now pretty much all that's left is 425. If we break under that point, that right shoulder is going to be well on its way to completing. And when it comes to triple Q, guys, it looks awfully similar. Look at this. We have a head and shoulders on the yearly chart. Let me draw it out for you all so you can see it. We have the left shoulder right here. We have the head right here. You guys see it? And then we have the right shoulder right around here. And it's not as clean of a head and shoulder as SPY, but it still is one. Nonetheless, it still is one. You guys can see it. And pretty much what is holding on, what's holding on right now is 335. That's a big level of support. If we break that point, there's really no support between 335 and about 317, 320. That's probably where it's going to go, which means it could have another 4.5, 5% downside from where it is right now. And that's where the right shoulder in this head and shoulders pattern will complete. So I'm going to put my alert at $335 a share. Mark is at or below. We'll see what happens there on triple Q. And let's take a look at the VIX very quickly. Let's see how this is looking. So clearly it's trending up over the past year. That doesn't surprise me. And on this 4-hour chart as well. And if we zoom in a bit, you guys can see 32 is a sticking point on the VIX. You know, if we start getting above that and just above 30 in general, that might be peak volatility. And it could go above 40. I'm not saying it can't go above 40, but it looks like 30 to 35 is the range where it's been trading. So if we get back up there, you guys know what's going to be happening at that point, right? So let me know your thoughts down below in the comments. Make sure to hit the like button. Let's try to get at least 150 likes. I think we did it last time when I challenged you guys. Let's try and do that again, 150 likes, and even more than that. Run the like button up, and let's talk about some stocks now. I think DraftKings got an upgrade. Let's take a look here. DraftKings today went up 7.5% after getting destroyed when they reported earnings on Friday. They went down a bunch, but we actually got some upgrades today, which is moving the stock. I think, let's see here, JP Morgan maintains a neutral rating. They lowered their price target from $30 to $19. Okay, I guess that's not that great. Roth Capital upgrades DraftKings to neutral from sell. I guess that's good. They adjusted their price target to $19 as well. And we have Craig-Hallum adjusting DraftKings price target to $40 from $51, maintaining a buy rating. Okay, not too bad. And let's see here. Did Wells Fargo say anything? I'm not seeing anything here, but overall, we are getting some upgrades, and we did get one price target lowered from JP Morgan, I believe. But overall, not too bad of news. That shot up DraftKings. Let me get some coffee, guys. Hold up. Yeah, that shot up DraftKings, 7.5%. But the truth is, it really is, it's not doing much considering on Friday it went down about 20%. So we recovered not even half of that game. But we'll see if this momentum continues. If you guys take a look here, or rather, we didn't recover half of that loss with today's 7% gain. I mixed that word up there. And we're noticing on this 5-day chart an inverse head and shoulders. So we have to see if this momentum continues or not. You know, if it does, we might be going back 20, 21, 22 on DraftKings in the very short term. So keep your eyes on that. We also had Home Depot report this morning, and this stock got destroyed. Home Depot down 9%. This is crazy, guys. This is crazy, and not to toot my own horn, but we did call out the head and shoulders here on this YouTube channel a couple of days ago, and I mentioned to you guys, look, if Home Depot breaks under 345, it was going to see a huge leg down, and especially if earnings were rough, and that's what ended up happening. Earnings were, a lot of rising costs affecting Home Depot. Earnings were, not that great. Now the stock's cratering, and we pretty much completed that head and shoulder, and at this point, I wouldn't short Home Depot. I feel like the time to short it was a couple of days ago. At this point, I wouldn't be surprised if we got a relief rally. Maybe it filled the gap back to about 335, 340 over the next couple of days because, quite honestly, guys, it is way too dang oversold. So I'm going to be waiting for it a couple of days. Maybe we bottom out. And I almost forgot. I didn't even read their earnings yet. EPS came in at $3.21 versus $3.17. So they did beat EPS. Revenue also beat $35.7 billion versus $34.87 estimated. So they had a double beat, which is nice. But they're guiding for low single-digit earnings growth in this year, full year 22. So that did hit the stock a bunch, even though they did double beat, and they actually raised their dividend as well. Dividend got raised by 15% from $1.65 to $1.90, which is great. Considering inflation, the government says 7.5%. It's probably more than that. So a 15% dividend raise, that is keeping up with inflation, probably outpacing it a little bit. So pretty nice dividend raised by Home Depot for all you dividend investors out there. Now Home Depot is down about 25%. So it's officially, after today's red day, it is officially in a bear market. Let's see if Lowe's got hit too. Probably. I mean, in sympathy to Home Depot. Yeah, Lowe's went down 3.6%. They report earnings tomorrow morning. Yeah, they report earnings tomorrow morning, so we're going to be breaking that down on Patreon in the morning. I make morning videos every day on Patreon. If you guys are interested, that's linked down below, and we might talk about it on the channel. I'm not sure. We'll see. But overall, Lowe's today went down 3.6%. The head and shoulders is very obvious on the stock, and if they drop the ball in earnings, they could easily fill the gap down at 200, 205, which is where that right shoulder will complete. So let's talk about some other companies that reported earnings that I didn't see their earnings yet. So we're going to get a bit of a live reaction here. If you guys do enjoy this, of course, hit the like button, and let's get right into it. So Mercado Libre, MELY. This one went down 5% on the day, closed about at 870 or 887 rather. So not the best day for Mercado Libre, but after market hours, guys, oh man, it looks like this stock is coming back in a major way. Like I said, we closed at 887, down $50 on the day. Now the stock is up $80 after market hours. It recovered all of that loss and some. Now it's up 10% after market hours. So let's see what Mercado Libre ended up doing. They reported, let's see here, Q4 revenue of $2.1 billion. It says loss narrows here as revenue jumps. They did EPS of 99 cents. And let's see here. The revenue a year ago was 1.33 billion the quarter a year ago. So they went from 1.33 billion to 2.13 billion. and the estimate for the quarter was $2.01 billion. So nice beat on revenue for Mercado Libre. It's clear as day that they have a lot of growth. I mean, the company pretty much grew at 70% year over year revenue, if my mental math is correct, something like that, 70-80%, maybe a little bit less, 65-70%, something like that. And the e-commerce company's unique active users reached 82.2 million in Q4 compared with 74 million a year earlier, whereas gross merchandise volume grew to 7.96 billion versus about 6.5 billion a year ago. So they're growing all across the board. Unique active users, gross merchandise volume, everything seems to be growing with this company, and the stock has gone down a tremendous amount. If you look here on the 4-hour chart, Mercado Libre is down from 1970, so almost $2,000 a share, and now it just hit 870 today. It's down 55%, and it's down roughly 50% even with today's after-market hours pop. So this stock's down a bunch, guys. It's in a bear market, and if I show you all this 3-year chart, the trend doesn't look that ugly. I mean, it kind of does look ugly. I'm not going to lie. Now we're under the 180 moving average. We're more towards the bottom of this channel, but it kind of looks like an overall double top at 2,000. And we don't really have a bottom in sight. A big support coming up could be about 750 if things were to get ugly. But now that they reported good earnings, the stock's starting to move up after hours. Maybe this could cause the stock in general to kind of push up over the next couple of weeks, months. And of course, it depends on the overall markets, and this whole Russia-Ukraine craziness. I mean, that has a role in everything right now. But we're going to have to watch it. We're going to have to watch it. I'm not going to jump into Mercado Libre quite yet, but I will in the next couple of weeks if we start getting that break of downtrend, the break of a downtrend, which we're not getting yet. But I'm going to put my alert, let's say at about 1,100. Maybe not. Maybe 1,050, and we'll watch what it does from there. Mark is at or above 1,050. So Mercado Libre, pretty nice quarter. We also had Realty Income, which if you guys are in my Patreon, this is one I started buying recently, and recently in general, I started buying some REITs. I was out of REITs for a good 2-3 years, but now I started to get back into them just to get some yield, guys, honestly, because a lot of my stocks, a lot of them are not dividend payers. And sometimes it's nice having that little, a little bit of diversity with some dividend stocks. And REITs, even though they're not stocks, they're real estate investment trusts, they pay some nice juicy dividends. Realty Income, I think, pays about 5.5%, and they pay that dividend monthly. So I'm in this one. I bought it a couple weeks ago. Vici Properties is another one that I'm in. They own a lot of hotels, resorts in Las Vegas, across the country. They own golf courses, a bunch of other stuff. So Vici Properties is another one I'm in. And I'm in Stag, which is an industrial warehouse type of REIT. They own, FedEx is a renter. Amazon, they own a bunch of warehouses. And honestly, I was looking at their in terms of Stag, and I'm getting a bit off on a tangent here, but Stag, a lot of their they're not too top heavy in terms of Amazon being 30% of their warehouses, or FedEx. They're, from what I remember, very diversified, 3%, 2, 3, 4% in each of these different companies in terms of each company renting from them. So I like that diversity. So overall, those are 3 REITs I'm in. And now that I'm off of that tangent, I'm done the little tangent, guys. Let's take a look at Realty Income's earnings. They reported earnings after market hours. So let's see what they did. They did, let's see here. Where is it? Roughly $685 million in Q4 revenue, EPS of a penny. Nice. EPS of a penny. Is that right? Q4 EPS of 1 cent. Okay, I guess that's right. Net income of $4 million. So I got to dive deeper into that. You guys can clearly see the stock is unchanged. Actually, is it moving up a bit? Or no, it's gapping down. It's gapping down a bit. It is down about 0.6%. Really nothing after market hours. So REITs, yeah, I mean, they're interesting. They're a bit different from stocks in terms of valuing them. You have to look at funds from operations, yada, yada, yada. We're not going to dive into that in this video. But overall, that's what Realty Income did. The stock's unchanged. And if it goes down 60, 62, 63 a share, I'm going to be buying more Realty Income for that good old yield, which again, they pay about 5-6% dividend every single month. They pay whatever that is, 6% divided by 12. Do the math, guys. So Teladoc, they also reported today, stock seems to be down. They did about, where is it here? About 7 cents. They lost about 7 cents EPS. They did revenue of $554.2 million, and they see 2022 revenue of $2.55 to $2.65 billion estimated. So that's not bad. I want to see what the estimate is on that, to be honest. And it seems like the stock, like I said, is moving down after hours. We closed at about $65. It shot up to 73 initially, but now it's down to 61. So talk about volatility. We shot up initially about 10%. Now we're down about 5%, roughly. Actually more, 7%. So this one's a roller coaster, guys, and this was one of the biggest stocks during the pandemic. I mean, if you take a look at this from 2019, August 2019, it went from $60 to $308 about a year ago in February 2021. So a good year and a half, or during that year and a half, it went up a solid, get ready for this, guys, it went up at least 3-4x. Let's do the math. 450%. So, I mean, that's unbelievable. Teladoc now is back down to the levels that it was at back before the pandemic. Now's the time to see what the new valuation is for the stock, because it doesn't take a rocket scientist to tell you when Teladoc shot to 300, it was frothy. It was way too overvalued. Now it needs to find its new fair value, or it needs to find a bottom. Let's just say it. Let's just say it together. It needs to find a bottom, point blank period, in this post-pandemic world, or at least as the pandemic is wrapping up here, because it is, at the end of the day, it is slowly but surely. And we have to see what it does. I mean, where is it going to find fair value? Is it $50 a share? Is that where it's going to bounce? Is it going to be 40? Who knows? But what we do know at this point is it's clearly still in a downtrend, and it does not seem like it wants to reverse, especially after that report that just came out. So we have CZR reporting. Well, they did report. This is Caesars Entertainment. They went down 3.4% on the day, closed at $76.50 roughly, and now they're down about $2 after market hours. Not the best sign, guys. They're down $2 after market hours. So let's see what they reported. They ended up doing EPS of about $2.03 in the red. So they lost over $2 a share in EPS, right? Lost about, that equates to about $434 million of a loss, and they did revenue of $2.59 billion. Let's see if they have any guidance here. It says Q4 losses narrow on revenue growth. Sportsbook, Caesar Sportsbook, currently live in 22 states and jurisdictions. Not too bad. CEO says Caesar Sportsbook continues to exceed our expectations. We all know at this point there's a lot of players in that space. DraftKings, we have MGM, Caesar Sportsbook, FanDuel, Penn, the list goes on. There's just so many. Who knows who's going to be a winner? In my opinion, I've said this before, I think some of them are going to get bought up. They're going to merge. There's only going to be 2 or 3 big sports books probably in the next couple of years. I could be wrong, but that's just smart to me. You know, if we got news that Wynn bought out DraftKings or something like that, I would not be surprised at all. I would not be surprised at all. So Caesars is it's continuing the downtrend, guys. Not looking that great like a lot of these stocks. It's in free fall mode. This might go back down and test the lows from $68. And if these hotel stocks, entertainment stocks, whatever you want to call them, if they continue to get clobbered, these could be nice recovery plays, in my opinion. You know, Caesars is now down about 40%, you know, Wynn's down a bunch. A lot of these are getting destroyed. I think Marriott's the one that's not doing as bad. Yeah, Marriott, that one's holding up. But a lot of them in general are just getting destroyed. And Virgin Galactic is one that also reported earnings, which has been devastated. This stock has been devastated. It's down 90% over the past couple of months here since just 6-7 months ago. That's just crazy to believe. This stock was $60 7 months ago. Now it's at $7. It just goes to show how quickly these speculative investments could go down. And full disclosure, guys, actually, before I say that, let's talk about their earnings, or lack of earnings, the lack thereof earnings, guys, because they only did 31 cents in the red. They lost 31 cents versus a loss of 34 cents. And they did sales of $141,000 versus $330,000 estimated. There's people in the world that make more than that in a year, right? 140,000, and that's what they did for the quarter. This publicly traded company, Virgin Galactic. And full disclosure, I'm long Virgin Galactic, and this has been a speculative play for a while for me, and I still hold it, guys. I kind of forgot about it, I'm not going to lie, because I own such a small amount. I mean, it's just laughable how little of an amount I own, but I've been riding. I've been riding with it. I've owned it for a good year. It's probably over almost 2 years at this point. Almost 2 years, because I remember 2 years ago, in February, I was actually in Disney before the whole pandemic, and Virgin Galactic, that's when it started popping off, and everybody started freaking out about it. There was so much hype about it. Go back, look at the chart. You'll see it. Actually, you can see it right here. Look at this, February 2020. This is what I'm talking about. The stock went from $10 to $40. I remember I was trading it there, and it got on my horizon. And then I just bought some long-term shares. I think my average is like $16, $18. And I rode it all the way up. $60 a share. I was up 200% at one point, and now I'm down 50%, probably even more. And I don't care, because again, it's a long-term speculative play. For all I know, for all I care, it could go to zero, and I'll be all right, guys. I will be all right. So overall, that's pretty much it for this video. If you enjoyed it, hit the like button, subscribe, drop me your thoughts in the comments, and again, make sure to get us to 150 plus likes. 150 plus likes. Hit that like button. Make sure to join my Patreon and get yourself 5 stocks from Moomoo. Literally free money. Link down below. All you have to do is deposit at least $100, and you could get up to 5 stocks, each of which could be valued up to $3,500. Link down below. I'll catch you guys in the next video. Peace out.